Buongiorno, good morning everyone, and it's always worrying when someone says it's going to be interesting. I hope it lives up to that. Italy also is a very important place for me, like Baroness Neville-Rove, partly because 29 years ago I met my wife here, and so it's always nice to come back to Italy. Happily we're still together as well, which is great. So the question, well, why is Fujitsu here? Well, maybe if I tell you a little bit about Fujitsu first of all, and maybe that will put it into context. And thank you also, I was really touched by many people here, all of the panelists speaking in English, which always humbles me when I come to another country. Thank you very much for that. So Fujitsu cannot be described as anything other than a large business. We're the second largest IT company in the world, and Europe is a very, very important place for us. Our largest company outside of Japan is in the UK, but of course some of you will know that there is Fujitsu in Italy and in fact every member state of the EU. And I'd like to start by actually just saying something, maybe it's been ignored so far by our politicians who spoke this morning, but as a UK businessman, I am a UK businessman that feels the UK should be part of the EU. And Tech UK, who is our trade body for digital industries, they're going to be speaking later on. They've done a survey of their membership, which is most of the digital industries in the UK, and over 70% of UK businesses in this sector wish to remain in the EU. So I'm looking for a very positive result in June, and hopefully we'll still be trading friends in a very close relationship. What I wanted to do today, Fujitsu, first of all, Fujitsu touches everyone's lives. We say in the UK that 99% of the population will touch Fujitsu technology every day. Now this surprises most people because most people don't see our brand. And that's because our brand is very much behind the technology that you use. So in the UK, 60% of all broadband lines are on our platform. If you use a rail ticket from any operator in the UK, it's issued by our software. If you use your credit card in most of the high street stores, it's processed by our company. If you apply for a driving license or if you apply for a passport, it's our technology. If you go through one of our borders in the UK, I'm sorry, it's quite laborious sometimes, but again, all of the software that's being used is ours. And also supporting our national infrastructure and our national security. So we're very proud of that. It's a very large company in the UK, about 2 billion turnover, and about half of that is helping serve UK government. So that's why we're here. We're here because actually being a large company in the digital industries is important. But actually what feeds us is mainly our smaller supply base. And we have over 2,500 suppliers in the UK who are small companies. And these small companies drive our innovation, bring us creativity, and bring us new intellectual property. And that's really important to the digital sector. But what I wanted to talk about today was actually about the digital world in a larger way. Digital services have become integral to all our lives. No matter what we're doing or where we're doing it, it pervades all areas of society. From 2008 to 2012, UK schools spent more than £1 billion on digital technology. It's a big figure, £1 billion. As a nation, the UK spends almost 9 hours every day in some kind of media services, which is more than we actually spend sleeping, certainly more than I do. And Generation Y, young adults, are bringing their unique expectations about technology to workplaces around the continent, around Europe. One thing I love is Darwin's theory of evolution that says that it takes generations for people to adapt. There is a fact that if you are under 35, there is a big difference between under 35s and older than 35. So if you're my age and older than 35, if you want to press a button, you use this finger. If you ask someone under 35, instinctively they will use their thumb. And that, I think, is Darwin's evolution in just half a generation. And this is all about using our keyboards. And it's clear that society is becoming more digitally led, and businesses must adapt to this new reality and keep pace with this change. So we asked, to understand what was going on, Fujitsu asked UK organisations how they meet this vast demand for digital services. And so we surveyed 1,000 UK adults and in fact 1,400 UK employees, not the same adults. And we came out with some very, very interesting data. And we also then contacted some CEOs of some very important companies in the UK. So, amongst the 1,000 adults we surveyed, 85% said they always or sometimes use digital services when interacting with businesses. In this group, we see a strong degree of confidence about what they're going for and what they're using it for. 67% of respondents believe that it's quicker, 63% saying it's simpler, 42% saying that digital services can help them with save money, and 40% enjoy being able to access services whilst they're on the move or perhaps in out of hours time. However, there's clearly some limits to the public's acceptance of technology when interacting with business. Asked to recall a time when they had chosen not to use digital and why, 40% suggested that it was because they needed answers they couldn't get through the digital service they were using, while 35% simply said they wanted to interact with a human being, a real person. So this graph shows you the sectors that are leading in the digital space. And leading the charge in the frequency stakes is the financial services sector, perhaps understandably considering the nature of some of the services offered here. With everything from balance checks to self-service terminals in banks included under our digital umbrella, there are many number of ways that consumers interact with their banks and of course other financial institutions. 40% of respondents say they always opt for digital when dealing with their bank or other financial institutions, the highest response in the study. Contrasting with this, transport firms, organisations that millions of us interact with on a daily basis, are regulated to the bottom of the pile in terms of customer preference for using digital methods. In the cases of retail and transport, for instance, it is perhaps just more as likely that a member of staff would be on hand to assist, certainly more so than during an interaction with a central government agency. And as such, customers who choose a mix of digital and in-person activity with these companies, it is only when you begin to explore the levels of satisfaction that the whole picture then begins to form. So this graph here, it looks quite busy, but looking at what digital services are most used for and valued, it's clear again that financial services industry comes out on top, with online banking being used by 67% of the population and valued by 63%. By the way, these slides, if anyone wants a copy of them, I'll make sure the organisers make them available to you. Retail closely follows finance, with 66% of those using online shopping, a service many of us increasingly found both convenient and easy. Interestingly, government services are once again at the bottom of the list in terms of frequency and value, with a range of activities such as renewing driving licence, communicating with the local government and paying parking fines, well below 10%. So focusing on the financial services sector, we really decided to drill down and understand what banks and insurers must do to remain successful. Fujitsu's recently conducted detailed research questioning more than 7,000 consumers in 7 regions across Europe. We then supplemented this insight by conducting in-depth interviews with business decision makers from banking and insurance across the 7 regions. Echoing the results on the previous slide, as you can see, it is clear that online banking is by far most popular way to interact with one's bank, outstripping the more traditional methods. The drive towards convenience is always accelerating rapidly. The majority of consumers believe interactions via traditional channels, that's offices, branch offices, 58%, telephone calls, 50%, by correspondence letters, 40%. That's going to decline even faster during the next 5 years. Meanwhile, more automated interactions, whether through online banking, which is 76%, mobile applications, 61%, self-service kiosks or ATMs, 48%. These are all predicted to grow. One senior banker summed up the transition saying, "The most important channels are online, followed by the latest gadgets like mobile. We will not be going back to traditional banking." The anywhere, anytime nature of online banking is undoubtedly a factor here, but this trend is not simply a question of digital versus physical. Instead, it's about the desire and drive from consumers from an omni-channel experience. Today, we find that self-service kiosks and ATMs come a close second to online banking in terms of popularity, with nearly 2/3, that's 64% of consumers, using them at least weekly. It seems self-service provides a convenient medium that bridges banking's physical past and its digital future, easing consumers into a new, more convenient behavior and at a comfortable pace. The surprising growth of self-service also demonstrates that consumers may not know how they want to interact with organizations before new possibilities arrive. After all, consumers didn't predict the internet, yet now Europeans spend 27 hours online every month. Consumers didn't see mobile connectivity coming, but there are now 1 billion subscribers across Europe. Consumers may not yet hunger for what the industry terms the Internet of Things, even though we're on course for 25 billion connected devices, which they surely will soon find indispensable. In harnessing customer trust, it's never been so valuable and also so hard to come by. Social media and internet companies fare least well. Just 1 in 7 consumers, 15%, say they trust them with their data. Media companies, utilities and local government do little better, with a trust level of less than a quarter, 24%. In comparison, the financial services sector is in strong health. Today, it leads the field in retaining customer faith. A third, 36% of consumers, still believe banks and insurers will protect their personal data. Within this trust lies a huge opportunity. Today, almost all European consumers, 97%, are happy for their personal data to be used to inform, make recommendations, or add value to their financial services. Consumers are most open to financial services using their personal data to lower mortgage or interest premiums, maybe 59%. Recommend relevant products and services, 47%, or keep them informed on the spending and saving, 44%. There's also considerable interest in personal data being used to reduce specific insurance premiums. So in conclusion of this research, I think what's fair to say is the ability of the public to use digital services when interacting with businesses is growing. And it's the importance of business adopting new technologies in order to facilitate this interaction, which is most important. The public wants to use digital services, and it's now important for all businesses to ensure they can do it. Now, in finalizing, I just wanted to give you 2 very brief examples of how these digital changes are affecting our customers. One is a government customer. And you may have seen over the last couple of years the increase in the number of floods that we have in the UK. So Fujitsu, working with the Environment Agency, has created a floods warning index. Now this digitally connects the Met Office, the weather service in the UK, with directly the farmers and the individuals living in flood-affected areas, and gives them a digital alert either via email or by their mobile phone when there's a severe risk of flooding. And this is helping people manage their businesses in the agriculture business, but also manage their lives and avoid damage to their property. I think the other one that is fascinating is something where we talked about this disruption of business, where technology is going to change a particular industry. And I'll leave you on this one. I was speaking to the CEO of one of Europe's largest insurers, and he said in a very throwaway remark that within a generation, no one will learn to drive a car anymore. And of course, I've found the same reaction as you. I thought it slightly amusing. And then he explained. So at a point where there is a propensity, where there are more driverless cars than people who drive, the insurance model can't cope with that. It then gets to a point where if you choose to drive a car rather than have a driverless car, when there are more driverless cars on the road, the risk of you driving the car goes up tremendously. At that point, premiums go up. And so in real terms, today, if that was the case, in the UK, if you're a 17-year-old and you want to learn to drive a car, the premium is about £2,500 to £3,000 a year for a 17-year-old today. In real terms today, if 60% of all the cars on the road in the UK were driverless, that premium would be £50,000. So in effect, within a generation, it may be that we lose the skills to learn to drive. That's very an interesting prospect. So on that note, I'll leave you. Thank you very much for giving me the time. It is a very important relationship that the UK has with Italy, and long may it last. Thank you.
Thank you very much, Simon.